What is an income statement? Is it the same as a profit and loss statement, or what is sometimes called a P&L statement? An income statement provides a summary of a company's earnings over a specific period. The income statement goes by various names, each offering insight into what this tutorial on income statements will cover. Consolidated statement of earnings, earnings report, profit and loss statement, statement of financial performance, statement of operations, or simply the income statement. If you can't locate a company's income statement, try searching using any of these alternative terms. Learning to read an income statement is similar to learning to read anything else. We recommend exploring numerous real-world income statements from companies that interest you. By analyzing the income statement and its accompanying notes in the annual report, you'll simultaneously gain valuable insights into how the business operates. Let us guide you through reading an income statement using Microsoft's financial statements as an example. We can obtain a viewing sample of the income statement from their official website and examine it for learning purpose, shall we? As you can see on the screen, the income statement shows figures from right to left for fiscal years from 2017 to 2019. Identifying years should be the first thing you notice when examining any income statement. Comparing years will help you understand how the company is performing over the years. The income statement reflects how much a company, in this case Microsoft, has earned over a given period of time. Which period of time? Look at this line. It says year ended June 30. This means we are examining income of Microsoft for fiscal years starting July and ending June 30 of the listed financial years, unlike usual calendar years, which starts in January and ends in December. Let's have a glance at the revenue line at the top of the income statement we are currently reviewing on screen while comparing it to the net income line. Accountants sometimes call these lines top line and bottom line for simplicity. Total turnover are often used as synonyms for revenue, while net profit or net earnings are commonly used as synonyms for net income. When business owners or investors discuss the progression of a business revenue and income, they are typically comparing the total revenue to the total net income of that business. Let's now walk through the entire income statement together, starting with revenue. In this example, Microsoft generates revenue from both products and services. Now let's continue while staying within the revenue section of the income statement. Do you see the cost of revenue section? This part reflects the costs associated with producing and delivering both products and services to customers during a specific period or fiscal year. At Invent, for example, where we offer Invent ERP as a cloud service, we must include the cost of providing this service in the income statement. This could involve expenses like cloud computing resources, for example. Ideally, the cost of revenue will naturally increase as the total number of sold products and services grows. Makes sense, right? Yes, absolutely. It makes perfect sense. Here's a helpful exercise for you. The next time you review an income statement, make a note of the listed costs for services or products in the cost of revenue section. Then try to connect these costs to the items presented in the top section under revenue. This will help you better understand how expenses are tied to the company's income. Generally speaking, every revenue item listed in the revenue section of an income statement typically has a corresponding item in the cost of revenue section. Now let's examine the profitability subtotal. Do you see it? It's labeled as gross margin. Gross margin reflects the percentage of revenue left after deducting your company's direct costs, such as expenses for producing or delivering goods and services. Simply put, revenue minus cost of revenue. In this example, Microsoft's gross margin is approximately $83 billion out of nearly $126 billion in total revenue, resulting in a margin of about 65 to 66%. This means that for every $100 worth of products and services sold, Microsoft earns $66. Let's now move on to the next section of the income statement, commonly known as operating expenses. Do these numbers automatically increase with higher revenue? The simple answer is, not necessarily. Usually this section will contain cost of operations such as payroll, salaries, cost of advertisement and marketing, administrative cost, and so on. Take a moment to compare the individual operating expense items to the total expenses in this example above. By performing a few simple ratio calculations, we can see that Microsoft spends more on marketing than on any other expense category. Now let's proceed to the operating income section. Operating income is determined by subtracting the cost of revenue and operating expenses from the total revenue. In other words, operating income equals the gross margin minus operating expenses. In this example, we can see Microsoft has $43 billion of operating income on $126 billion of revenue. That's 34% of income percentage. Again, in other words, for every $100 of revenue, Microsoft earned around $43 in operating income. Moving on down the statement, you will see few more lines like other income net, income before income taxes, provision for income taxes. Wait a second, why is there a line labeled other income? Interesting, right? This indicates that a company can sometimes earn income from activities unrelated to its core products and services, such as external investments or other non-operational sources. However, every source of income must be accurately recorded and clearly presented in the income statement. Moving on, these lines can differ from one income statement to another and from one company to another, depending on the nature of the business and its operations. Eventually, we will reach to the net income line. Net income is revenue minus cost of revenue minus operating expense plus or minus other income minus provision for income taxes. In the above example, Microsoft has $39 billion of net income on $126 billion of revenue. For every $100 of revenue, Microsoft earned $31 in the net income. So that was the income statement, an overview of how much a company has earned during a period of time or fiscal year, all the way from the top line to bottom line. We hope you enjoyed this video and now have a better understanding of income statement. Subscribe for more financial knowledge from Invent ERP.